Well, all eyes will definitely be on L&T after a very strong showing that the company had. But remember, the stock has also rallied a lot this year. Vivek is here to give us the fine print. Vivek, good morning.
Well, good morning. Absolutely, very strong showing by L&T in the quarter gone by. It's a beat across all of the parameters that we're looking at. The key positive being, now remember, the management has indicated that it is most likely going to go ahead and beat two guidances that had given earlier. One is the order inflow guidance of 10 to 12% and the revenue growth guidance of 12 to 15%, likely to exceed both of that. What is the slight negative in this particular result? So the EBITDA margin guidance for the core business has been revised downward slightly. Earlier, the anticipation was that it would deliver close to 9%. Now it has been trimmed down to 8.5 to 9%. Talking about the numbers themselves, revenues higher by 19.3% on a year-on-year basis, a beat to our poll, coming in over the 51,000 crore mark. EBITDA, to above our poll, the core EBITDA we are talking about, up 15%, coming in over the 5,600 crore mark. Margins have contracted by 40 basis points on a year-on-year basis. However, remember, the management has indicated that H2 onwards there will be margin improvement because the legacy orders that the company is now being that it is executing right now will be out of the system, and therefore they expect margins to improve. Lastly, profitability higher by 45%, again a beat to our poll. Order inflow growth very strong, up almost 72% on a year-on-year basis. This is the consolidated order book, and when you're talking about the consolidated order book, currently the order book that the company has is very strong, over 4.5 lakh crore.
Okay, all right. Thanks a lot for that, Vivek. In fact, we'll be joined by Mr. Shankar Raman, the whole-time director and CFO of L&T, at 10:50 a.m. later today to discuss the past quarter's numbers. The other big nifty name that came out with numbers of Bharti, Airtel, Rima joins us to tell us more about that. Morning, Rima.
Hi, good morning. So slightly lower than what the street was anticipating. Consolidated revenues have fallen by 1.1%. We were anticipating a decline of 0.8%. Now, Bharti Airtel is a sum of parts. Airtel Africa numbers we knew, impacted by the Naira devaluation. It's the India mobile, the wireless business that we focus on, where the revenue growth at 2.7% quarter on quarter is again softer than the 3.2% that we were anticipating. This 2.7% revenue growth is been driven by a 1.5% ARPU increase, average revenue per user increase, and a subscriber growth. Now, comparing it with peers, Bharti, Vodafone Idea, and Reliance Jio performs better on the revenue front with a near 3% top-line growth and even on the subscriber addition. Though on the ARPU, the average revenue per user, Bharti still is slightly ahead. Profits for the company have fallen due to an exceptional, tax item due to the recent Supreme Court hearing. So broadly, Bharti's numbers are slightly softer than what the street was anticipating.
All right, Rima, thanks very much for that. Let's move on. Tata Consumer reported as well. Mangalam has got details here. Mangalam.
Well, they reported a good quarter, and the street was anticipating that. In fact, the company reported revenue growth of 11%. EBITDA grew over 20% as well. And if you compare it with our poll as well, the revenue is 3734 crores. We were working with a number of 3725 crores. The EBITDA as well, 537 crores, largely in line with our expectations of 525 crores as well. In the geographies, the India business grew about 11%. The street expectations were a range of anywhere between 10 to 12%. The international business optically grew 13% versus expectations of 5 to 7%. That's also on account of a couple of businesses that they consolidated within them. So that acquisition aided the optical revenue growth out there. India beverages grew 8%. Foods grew 16%. The heartening fact was their growth businesses, which include the likes of Soulful, Sampann, and Nourishco. All of them grew 39%, and this despite a weak quarter for Nourishco on account of summers, or rather, seasonality itself. And Starbucks revenue grew 14%. They added 22 new stores, and they were a bit positive. So see some green on Tata Consumer.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at JSPL. The numbers are a little bit disappointing. So the EBITDA number did miss our estimates by close to around 150 crores odd. That's what led the consolidated margins as well to come in lower. The key disappointment was on the India business. The India EBITDA per ton, which is bulk of their profitability. We were working with a number of around 12,150. Well, it came in at around 11,165. What I'm talking about, the adjusted EBITDA per ton. The other important factors that did play out, one is the exports. Well, they moved a little bit higher on a sequential basis to around 13%. The net debt, though, has moved up a little bit on a quarter-to-quarter basis. And the problem is some of those projects that they were talking about, it could be a little bit delayed. And the capex spend as well has been up. So put it all together, these numbers look a little bit disappointing.
Okay, disappointing from JSPL. But Tata Consumer was the other one. Birlasoft is the other one that we're looking at. Rima has more details on that. Rima, over to you.
Very strong numbers from Birlasoft, ahead of what the street was anticipating. The company's reported a revenue and margin beat. So the top line growth has come in at 3.1%. EBITDA margins have expanded by 50 basis points despite a 1-month impact of the salary hike, and deal wins for the company have shot up by 86% quarter on quarter and up 63% on a year-on-year basis at $271 million. Nuvama, post the numbers, has upgraded its EPS estimates by about 4-5%. They've upgraded the multiple for Birlasoft to 20x, and their target price stands at 530. Back to you.
Okay, thanks a lot for that. That's on Birlasoft. But Ekta is also with us to talk about Mankind Pharma. Ekta, how did that one look?
Well, actually disappointing because the revenue was up around 11.6%, but it was really because of the export business the reason why the revenue was up around 12%. And I'll get to the segmental breakup in just a bit. The margins came in at 25%. The street was anticipating around 26%. So there was a little bit of a disappointment there. Profit of around 500 odd crores, which was better than expectations. Q1Q as well, margins were maintained at 25%. The internals indicate that the pharma business was up around 7.3% on a year-on-year basis. It has grown in line with the Indian pharma market this quarter versus an outperformance that they used to report earlier. So that's basically where the disappointment stems from. They've always been outperforming. This time round, they've grown in single digits. That's because of a possible acute season which was delayed. The consumer health business, which has extremely strong brands that we know of, was up only 1.6% on a year-on-year basis. So there was a bit of a disappointment and slowdown which came in there as well. Could be due to one-offs. Exports was up 159% year-on-year, which is what really saved the day. I expect the stock to be in the red on account of the slowdown in the pharma as well as the consumer health business. The call is at 12 p.m. this afternoon.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Surbhi. She's here to tell us about Mac Financial Services and Star Health. Morning, Surbhi.
Good morning. So let me start with Star Health first. It was a weak set of numbers. The gross written premium, that was up 17% on a year-on-year basis. But the combined ratio, that was up 130 basis points, came in at 99.2% versus 98%. That is because of higher claims ratio. That was up 50 basis points, came in at 69%. Now, in the con call, the management said that they have taken price hikes in some of their key products and they will look for further price hikes in some of their other products, which means that there will be more value growth instead of volume growth. They have increased combined ratio due to higher claims ratio, and management will not be able to meet the combined ratio guidance of 93 to 95% for FY24. For Max Financials, the APE was up 39% on a year-on-year basis, very strong APE growth. VNB was up 12%, but the margins compressed down 610 basis points at 25.2%. Now, the APE growth was strong and it almost doubled in the par and the protection segment, which is higher margin products, and the VNB margin compression is not due to an unfavorable product mix, but instead due to higher commissions and investments. So that is why going with the green for Max Financials.
Okay, thanks a lot for that. Naveen, Florine had a weak set of numbers. Sonal is here to give us the lowdown. Sonal, over to you.
Good morning, Sonia. Well, yes, it was a weak set, top-down miss versus CNBC-TV18 poll. Yes, the revenues were up 12.5%, but lower than the poll at 472 crore rupees. EBITDA was up 5%. Margins, they were expected to expand on a YOY basis, but they have come down to 22.4%, and this compares with 20.8%. This compares with 22.4%. Profits were up 5%, but EBITDA margins, they have come in at an 18-quarter low. So that's the big miss that we are talking about. The company says they lost revenues close to 100 crore rupees this time around because of delays which will be accounted for in Q3. But demand for new molecules continues to be robust, and most of the projects, they are running on schedule, and stock order book is there across businesses, but there was no word on the new CEO appointment as yet. Jefferies has a hold rating on the stock. They've cut the target price to 3165 versus 3625 earlier. They've cut the FY24-25 EBITDA estimates as well, and Nirmal Bang also has cut the target price by 14% to 4,000. They maintain a buy rating on the stock.
Okay, well, Sonal, thanks for that. KEI Industries is the next one we're focusing on. Surbhi is here with details. The management, by the way, also joins us a little later. Surbhi, over to you.
It was a very strong set of numbers from KEI. The revenues grew 21%, EBITDA grew 27%. Also, the gross profit expanded. Their EBITDA margins expanded by 50 basis points. Now, 90% of the revenues comes from the cable segment, and in that segment, they saw a revenue growth of 14% and a margin expansion of 210 basis points. And within the cable segment, their extra high voltage cable that saw a revenue growth of nearly 4 times, which has primarily driven the revenue growth in that segment.
All right. In fact, we will be joined by the management of KEI Industries at 9:50 a.m. later today. So we'll keep tracking that one closely. Here's a quick recap of our top stocks with positive news flow. There's L&T, Tata Consumer, Max Financial, Birlasoft and KEI Industries. While stocks with negative news flow, there's Bharti, Airtel, JSPL, Mankind Pharma, Star Health and Naveen Fluorine. But crude prices have softened actually in the last couple of days. Supply concerns have eased globally. Manisha Gupta is here to give us a roundup of all the action there. Manisha, over to you.
Thank you for that, Sonia. Well, yes, we're trading at an $85 a barrel right now, which has been a constant decline. Actually, if you look at the month of October, it was the worst monthly performance in 5 months that crude prices put out. We've seen 10% of this decline come in for the crude prices then. It's trading slightly in the positive right now as we start the month of November. If you look at the Israel-Gaza conflict, that has had a limited impact on prices. We did see a knee-jerk reaction, but because there is no impact on the crude supplies and exports, we have seen that premium go off. Also, the weak China data continues to weigh on. Markets clearly are awaiting for the US Fed meeting announcement today. And then you also have to look at the Goldman Sachs report that came in last night, suggesting that the Brent prices are headed for $100 a barrel. But this is by June 2024. The deficits that might be created in this quarter will start showing in the first half of next year. For the near term, it continues to be quite volatile. It's going to be the US Fed meeting today, Bank of England meeting tomorrow, and the US non-farm payroll data on Friday. So it promises to be interesting next 3 days.
All right, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick commercial break here. Devin Choksi will be with us of DR Choksi FinServ for some fundamental stock check that's coming up in just a bit. A little later than that, we'll also have Amit Kumar Sinha of Mahindra Life Spaces to discuss their second quarter performance. Stay tuned.